Srishti. We'll leave it at that. In fact, we're going to quickly take it across to Ansh. But before that, let me take it across to Sudip Bandyopadhyay. Welcome him on the show right now. Sudip, hi, afternoon. Good to have you as always. Can't take your eyes off from the Tata Group names, can you? With all the talk around Tata Sons, look at the move on a Tata Power, Tata Chemical, Tata Steel. I mean, you name any group company that's holding up.
Absolutely. I think, Aisha, the buzz around listing of Tata Sons is gaining momentum, considering the timelines suggested by RBI in their when they came out with the new set of regulations. I think there is a strong speculation that Tata Sons will get listed in the near future, and the best way to play that will be probably through Tata Chemicals. That's the conventional thinking in the market, and that led to this kind of massive rise in the share price of Tata Chemicals. The other companies are also benefiting from that halo effect, I would say. I'm not saying they're not doing well, whether it's Indian Hotels or Tata Power, Tata Motors, all of them have their individual reasons for getting a good valuation and doing well. But I think this is the halo effect of Tata Sons IPO and its effect, what it can have on Tata Chemicals shares and shareholders. So pretty much that's what it is. If somebody has to really look at the Tata Group, I think I would think Tata Steel is still the best possible buy. The way the steel industry is poised, the way the global steel manufacturing and demand is shaping up, the way the Indian strong demand of steel, considering the massive infra and construction spend which we are witnessing now and likely to witness in the near future, I think Tata Steel at current level definitely is a good long-term buy.
And regulatory action. Sudeep, you run an NBFC, you've worked in one, and you have obviously invested in many. This entire crackdown, maybe crackdown is a slightly stronger word, a kind of a slight nudge, as RBI governor himself kind of alluded to it, not any strong action, but the market actually corrected froth from many of these NBFCs. Talk about Bajaj Finance, IIFL Finance, JM, many others. Some fell in sympathy, which had nothing to do with some of the most conservative names from the south also fell. Would you recommend buying any of those, utilizing this fall and getting into some good names?
The regulatory action on India Infoline, I think Muthoot and Manappuram definitely were good buys, and I think they continue to remain good buys. Look, the restriction on IIFL definitely benefits Muthoot and Manappuram. So I think out of the two, Manappuram, considering the valuation, we think it is interesting at this stage. As far as other NBFCs are concerned and the RBI action is concerned, obviously the action is on the back of non-compliance of regulations and some kind of violations which RBI is cracking down on. This will, in the long run, bring much more discipline, and I think it's good for the industry overall, structurally in the long run. Of course, when some action like this gets taken, the shareholders gets nervous, and the price correction, price action permeates across the industry, and sometimes it looks unfair. So some of the stocks, as you rightly said, which corrected, had nothing to, no reason to correct based on action on JM or IIFL. So obviously that was overdone, and it's coming back. But if I have to buy an NBFC, I think still I will go for Manappuram at this stage. I don't think other NBFCs, considering the valuation, they're doing good work, but the valuation at this stage looks full in most of the cases.
What's happening in the new age vertical. Of course, we've talked about, Paytm at length, Sudip, but what about the other names, Delivery, PB Fintech, Nykaa? You just heard the commentary from the management as well. And even Zomato, it's currently around at what, 160, 170 bucks. Do you see it trending higher?
No, absolutely. I think if you see the new age companies, leave aside Paytm, I think, the realization came pretty fast that in the listed space, profitability is extremely important, and without that, investors are not going to like and give the valuation which they are demanding. And that's why there was a course correction by pretty much all these companies. And we've seen the results. As far as Nykaa is concerned, I always believed that the beauty and fashion is one segment, one part of business which globally has been doing very well. We all know of LVMH, one of the richest companies and one of the top performing companies for the last 1 decade almost. And the owner is one of the richest persons in the world. If you are in similar space, pretty much in an organized and structured manner, you're bound to do well. And Nykaa is getting its act together. I heard the commentary, and we are seeing in the market the performance improving. So I think long term, I think it's a good story. As far as PB fintech is concerned, again, insurance is an area which is grossly underpenetrated in India. And as far as their PB fintech, I think the only company which has till now successfully digitally started sourcing insurance in a big way. And I think that puts them in a unique position. The performance parameters have been improving dramatically, and I think again they have a good runway. I'm also positive on delivery. I think again this is an age-old business. I mean, logistics is 1,000-year-old business. They're just trying to bring in technology and do it more efficiently. So yes, once they get their act together, I think that's also going to be an excellent company. They haven't performed well as far as the quarterly numbers are concerned for quite many quarters, but I think this may be the time for the investors to start getting into delivery, because the turnaround may come very soon.
Right, okay. We were just discussing
length, Sudip, but if I had to ask you, let's say about Tata Power and Tata Chemicals, because Tata Chemicals has a solid run this week. What would be your comments on these two stocks, Sudip?
Well, as far as Tata Power is concerned, we do like Tata Power. In fact, there's all these power producing companies who are predominantly thermal power. They are transitioning beautifully into a mixed company, which is they will continue to have thermal, and they're also setting up massive green capacity, green energy capacity, and Tata Power has been doing that. The green energy part is very interesting, and that's coming up pretty well. As far as the entire power sector is concerned, I think the demand is robust, and the only challenge as far as Tata Power is concerned was the Mundra, but we believe that also is getting close to resolution, and that should do wonders for Tata Power's balance sheet. On the whole, we like Tata Power, but if I have to pick up one stock in this space, it will continue to be NTPC. We like NTPC over Tata Power, but Tata Power will be the second pick. As far as Tata Chemicals is concerned, I think they have done phenomenally well over the last few quarters. I'm not talking about stock market performance. I'm talking about financial performance. I think they have done pretty well. Their soda ash business has been doing well. Now the question remains the excitement as far as current excitement. I think that's pretty much on the back of Tata Sons listing, because Tata Chemicals will probably benefit the most if that listing happens.
Okay, point taken. So that's it.